Welcome to the Blake Overton Mortgage Team audio series, where we break down the most common questions that homebuyers have when it comes to financing their dream home. In these short, easy to understand guides, I'll walk you through the essential information you need when borrowing money to purchase a home. Whether you're a first-time homebuyer, selling and moving into another house, or even maybe refinancing, we cover it all. Let's dive into today's topic and make the mortgage process simple and stress-free. Hey, welcome back to Mortgage Made Simple. Today we're getting into a topic that might not really seem exciting at first glance, but it's one that every homebuyer should understand: escrow. If you've ever been confused about how your property taxes and your homeowner's insurance are handled through your mortgage, or if you've heard the word escrow and just nodded along, not really sure what it means, then this episode is for you. We're diving into the ins and outs of escrow accounts, why they exist, how they work, and why they can be a critical part of home ownership here in Iowa. I've broken this one down into 5 different parts. We're going to cover what is escrow, how it works, why your mortgage payment can change, so escrow adjustments. We're going to talk about the pros and cons of escrow, and then we'll close it out with some Iowa-specific considerations on your taxes and insurance. So what is it? Let's start with the basics. What exactly is escrow? So when you hear the word escrow, it sounds a little weird. It's not a term we use in everyday life, but it's just really a holding account. It's like a savings account, if you will. This account's set up by your mortgage lender to manage your property taxes and homeowner's insurance on a monthly basis. Why does it matter? Well, your lender wants to make sure that those critical bills, taxes, and insurance get paid on time, every time. So when you think about it this way, the lender has stake in your home too. So the lender wants to collect a portion of your taxes and insurance as part of your monthly mortgage payment. And then they set that money aside in the escrow account. And then when the bills come due, they pay them directly. Now, it's important to understand this isn't some extra charge or fee. These are costs that you have to cover no matter what. So the lender just spreads those payments out over the course of the year, making it easier for you to budget, ensuring that nothing falls through the cracks. And so how exactly does it work? And you got to break it down in the monthly payment. So when you look at your mortgage statement, you'll notice your payment isn't just going towards paying off the loan. It's split into different parts. You have your principal, which is part of the loan itself. You have your interest, which is what the lender charges for giving you the loan. And then there's the escrow part, which covers your property taxes and homeowner's insurance, both together. Each month, a chunk of your payment is funneled into that escrow account. The lender holds on to it and then uses that money to pay your taxes and insurance when they're due. Now, even though your lender is managing those payments, it's still up to you to make sure that they're collecting the right amount. For example, if your property taxes or insurance premiums go up, but your lender isn't collecting enough, you could end up with a shortage in that escrow account. And trust me, that can lead to not so great surprises in the form of a higher payment later on. And so that's kind of where things get a little bit tricky. So even if you have a fixed rate mortgage where you're thinking that your payment will stay the same, your monthly mortgage bill can still fluctuate, and it's almost always tied to escrow adjustments. So let's say the property taxes in your area go up. That means that the lender will need to collect more each month to cover those higher taxes, which causes your mortgage payment to go up too. Same deal with your homeowner's insurance. If your insurance company raises your premium, maybe because of higher replacement cost or changes in coverage, then your escrow payment will need to adjust to cover that new amount. So every year, the lender will do what's called an escrow analysis. This is when they review your account to see if they've been collecting enough money to cover your upcoming taxes and insurance that will be due. If they find that there is a shortage, they'll give you 2 options. You can either pay the difference in a lump sum, or they're just going to spread it out over the next 12 months, which increases your monthly payment. And if they collect too much, then what happens? Well, in that case, you're just going to get a little bit of a refund. It's not going to be a huge amount, but when it does happen, it's just a nice little refund check that you might get. So is escrow a good thing or a bad thing? Is it a hassle? Well, it's like anything else. There's ups and there's downs to having an escrow account. So let's start with the good. First off, it's convenience. Convenience is a big factor. You don't have to worry about remembering when your property taxes or insurance payments are due because the lender then takes care of that for you. They send that check out. They can do it while you're sleeping, and it just gets sent automatically, and you don't have to worry about it. And because these payments are spread out evenly throughout the year, you're not hit with one massive bill all at once. Now, on the flip side, there are some people who don't love the idea of someone else controlling that money. It's true, you don't earn any interest on the funds sitting in your escrow, and you can't touch it until those payments are made. Plus, even with a fixed rate mortgage, your monthly payments can still go up if taxes or insurance premiums rise, which can be frustrating if you weren't expecting it. But let's bring it back to Iowa specifically. Property taxes here are a little different because they're based on local government budgets. So depending on what's happening in your county or city, your taxes could rise unexpectedly, especially if there's like a new school or a levy, an infrastructure project that needs funding, things like that. So that's why it's important to keep an eye on local government decisions. While your lender will adjust your escrow account to reflect any changes in taxes or insurance, it's still on you to stay informed. So don't just assume that your escrow account is always going to balance out perfectly. It pays to stay on top of it. So why does all this matter? Because understanding how escrow works can help you avoid a lot of surprises down the road. While your lender is handling the payments, it's still your responsibility to make sure that the right amount is being collected. If you know what's happening with your escrow account, you can protect yourself from unexpected jumps in your mortgage payment or even penalties for underpaying on taxes. Thanks for listening to this episode of Mortgage Made Simple. If you have any questions about how escrow works or if you want to know how it impacts your mortgage payment, feel free to reach out. I'm always here to help break down the details, and until next time, we'll check you later. Thanks for tuning in to today's guide from the Blako Mortgage Team. I hope this short listen helped you answer your questions and gave you the confidence to take the next steps in your home buying journey. If you have more questions or you want to explore your options, feel free to reach out. Stay tuned though for more quick, helpful tips to make the mortgage process easier. So until next time, we'll check you later.